So here we go, the stocks I'm buying, March 2025 edition. Today I'm going to go through all the stocks that I'm buying on the US markets from the 1st of February to the 1st of March for you guys. I'll do the UK one version probably next Friday for you, but this is where I go through all the stocks that I'm buying and selling. It just keeps with that transparency because any stock that I've bought, any stock that I've sold is on this video here for you today, and I do it every month for you, so that transparency, you know what I'm doing in the market. If it works out, you'll see it. If it doesn't work out, you'll see it as well. You can go back and watch all the other monthly videos. A lot different from what other YouTubers do. Sometimes they'll buy the stocks and then they'll only show you it when it's worked out, and then if there's something that goes wrong, they'll quietly sell it in the background and hope you don't notice. We don't do that on here. Every move that I make is on these videos, so you'll be able to go back and watch the previous videos and see if they work out in 2, 3, 4, 5 years time, because we are buying it for a long-term point of view. Obviously as well, there's a lot of volatility in the market right now, which is starting to increase those little buying opportunities as well. And apologies, this video was not up yesterday. It was just a mega busy week and I just did not have time to record and edit this video for you guys, because this is the video that does take a while to put together. So I just didn't have the 6-7 hours to make the video for you, but here we go. If you could hit the like button, if you're new around here, subscribe. We are near 18,000 subscribers, and if we do get there, I'll try to drop a live Q&A session for you guys on the YouTube channel when we do get there. Apart from that, let's get started. Now, as always, if you do want to see these buys and sells in real time, the place to be is on the Patreon. I post what I'm doing in real time on there, and as well as a thank you, I give you 2 exclusive videos a week on there, sometimes even more than that, and a Discord with 600 members on to talk about stocks, including me. Links in the description, guys. It's £6 a month, or if you do pay annually, it only works out as £5.10 a month, and obviously support the YouTube channel as well. So thank you to any of you guys that are Patreon members. A lot of you guys have been joining at the moment, and as well as that, if you do want to start investing, join Trading 212 with the link in the description. You can get a free fractional share worth up to £100. That's personally the investing platform that I use. So obviously a lot of volatility out there at the moment, a lot of fear. Are we going to get that black swan event? We'll see. Obviously a lot of focus on the Trump and Zelensky exchanges that happened yesterday. I think it's the first time in my lifetime I can ever remember such an open political talk like that. You know, quite often you'll see that talk behind closed doors, and then all of a sudden we kind of got that kind of open debate about what's currently going on in public and in front of the cameras. Really did not expect that to happen, but yeah, I don't know if it's a good thing or a bad thing, but it's interesting that we actually saw something that probably goes on behind doors a lot more in the public, because obviously when they come on to normally do these speeches, it's like, yeah, we're best friends, even though they might have been arguing behind the scenes for an hour, and obviously, you know, that arguing behind the scenes for an hour actually came into the public eye, which was actually quite crazy. So we'll see if that creates any more volatility. Now, getting on to, first of all, the sells. Normally I do the buys first, but I decided to mix it around this time, and I'm going to talk about the stocks that I did sell. February was another fantastic month for me in the market. December was amazing, January was amazing, February once again even better. I would say that February was once again a new record on the amount of profit that I've taken out the stock market. Yeah, I made mega money in February. I was selling a lot of stocks off in February, so it's really good to see, and hopefully you guys as well were making some money in February. The first stock that I did trim the position on was Enphase. Now, it is actually also going to be featured in the buying category as well. A little bit of a hint what's coming up. So when the stock has recently dipped, I have been back buying. I am a buyer. I bought on the 25th of February, but I was also trimming the position up at $68, $64, $72, just because the valuation just went a little bit too crazy and it just looks unsustainable. And I knew at some point we were going to get this news about the FDA and the GLP-1 news, and it would spook the market on hims and hers, even though it shouldn't really do it. It was always going to happen. We had it when the Eli Lilly situation happened, which wasn't even the copycat that hims and hers did, and it sent the stock down. So I thought, as soon as that comes out, the stock's going to drop huge. I'm going to wish I took some profit off the table, and then I can go use that profit to go buy back in the dip. Now, look at that. absolutely perfect, worked out amazing. And I did, like I said, do some trims on Hims and Hers. I locked in a 850% return trim, an 800% return trim, 930% trim, 715% trim, and a 960% trim. So mega money made from Hims and Hers. So yeah, obviously still it's still my largest position. I still own a good chunk of Hims and Hers, but it just seemed so obvious to me that this dip was coming. And yeah, perfection. Sold very much out the top, and then I put a lot of that cash back in now, around about that $39. So that worked out absolutely amazing. Next one was DraftKings. Once again, I sold up near the highs of $53. Stock just had been on an insane rally, as you can see here, and I just decided, you know what, it's time to lock in a bit of profitability with DraftKings. Just once again, the valuation just got a little bit extended in my opinion, not crazy valued, but also there's a few things I didn't like what was happening with DraftKings. Some things like, you know, just in general, like iGaming states maybe not coming on as quick as what I wanted. A few things that they were doing in the business that I wasn't really a big fan of. And I thought, you know what, it's time to just take some profit off the table. We're here to make money. I'm up on the position. It's been on a very good run. At that time, the valuation was a little bit fairer. I think now it's not too bad, but it was a little bit fairer at the time. So in that time frame, I locked in a 75% profit trim, an 85% profit trim, and a 92% profit trim as well in that one. Meta, the first time I have actually trimmed the Meta position since the amazing rally that it's been on. What happened, once again, I think the stock market just went a little bit crazy in February. The stock went on a 20-day winning streak, which is just not sustainable. The stock rallied up huge, up to $736. I decided to take a trim on Meta, which I think was around about 220% trim on Meta. So yeah, really happy with that one as well. Not that it was crazy overvalued, but I think it just pushed up to like 30-something times earnings, which maybe is a little bit too high. And like just the 20-day winning streak was just absolutely bonkers. And then the rest of my PayPal position I completely sold out of. Obviously I sold the majority before earnings, and then whatever shares I did have left I just sold them out, and the stock has continued to fall even lower since then, and I'm happy about that one as well. I just think the valuation just was very fair for the financials they're doing. I thought the financials recently had been getting a bit poorer. I look at Alex Chris, he's doing a lot of talking, he's doing a lot of interviews, he's like the tech support on Twitter X at the moment. I'm like, you need to be focused on the business because your financials haven't been improving at the rate they should have been improving. That's me done with PayPal, and I'm happy I sold out that one as well. But overall, as you can see here, yeah, a really big profitable month, February for me. Probably, like I said, the most money that I made in the stock market ever during that period of time. So that's been obviously really good to see. Now, let's get on to the buying. Probably the reason why you clicked on the video. Stocks I have been buying. So these are all long-term holds for the next 2 to 5 years. They all have decent amounts of growth, good balance sheets, and all are attractive valuations in my opinion. Starting with number one, so Hims and Hers. So I have gone back into buying Hims and Hers. So after taking a little bit of profitability, a little bit of profit off the table when the stock went a little bit ballistic, the stock did fall 42%. In my opinion, that was too much of a drop, and I did buy during this time frame. Since that drop, the stock has started to rally up. I thought there would be some buyers starting to come in here at Hims and Hers. The valuation just did not make sense anymore. I told you a few days ago the forward PE is wrong. It's starting to get closer to actually what it is. It's still not even right at the moment, but let's call it 69 forward times earnings. 69 forward times earnings for a company that is growing at these sort of levels is very good valuation. I look quite often, the negative story I see on Hims and Hers is people go, oh, it's a crazy valuation. Well, no, it's a growth stock. You're not going to get a growth stock at 20 times earnings. That's where you've got to realize is like, okay, 3, 4, 5 years down the line, how fast are they growing this valuation? And if they grow into this valuation in a year's time and they continue growing, well, in 4 or 5 years time, you're going to be making a lot of money if it continues at these sort of growth rates. And I think that's what's going to happen. They've just come off a very good quarter. Looking ahead, the next quarter, we're expected sales growth to go to 92%. We're expected EPS to go from 0.1 to 0.21. And overall, another fantastic year for Hims and Hers at 57% growth. And I think the EPS will be even higher than that. And let's not forget, there is a tax benefit in last year's, and that's why it may not look as a good improvement as what it actually is going to be. And as we know with Hims and Hers, they normally sandbag the number. So I would expect these numbers to be a lot higher as they continue to grow. And they also have a lot of room as well. If you look at 2026 numbers, look at how low the analysts are actually forecasting these numbers at the moment. 14% revenue growth. Yeah, then they're going to be way ahead of that, and not much EPS growth as well. So yeah, I think analysts will once again be playing catch up on this stock. So looking at the company, they are a telehealth company. What they're able to do is offer the ability to get treated at home, not having to travel to all these places, easy access and affordable access. This is the big thing about Hims & Hers. They're trying to disrupt the healthcare space where it's easy access and affordable. Obviously, the US, we know there's big problems with the healthcare over there, and Hims & Hers are the disruptor. They are the disruptor that so many industries have had, but yet the healthcare hasn't had it yet. Well, until Hims & Hers come along, and they are starting to do all these kind of healthcare needs on one platform. Obviously, they kind of have the ED side of it that they've had for a while here, and the new kind of platform from the acquisitions that they've made recently are going to start coming as well. The likes of dermatology, which in the recent earnings, I think they said are still growing at very good rates. I can't remember if it was 50% growth year over year. Mental health as well, and also weight loss, which people are talking about, like the what we talked about earlier about the loss of GLP-1s, and I think few people have thrown this under the bus without actually understanding the business and what they actually do for the GLP-1s. So yeah, GLP-1s was on the shortage list, so people like Hims & Hers could sell them. It's been removed from the shortage list now, and people are thinking like this weight loss category has gone from Hims & Hers. That couldn't be further from the truth. They're still going to be able to sell their weight loss oral pills, which obviously are not as effective. I think they're like 30% less effective, but they are a ton cheaper. They're also going to be able to do their prescription side of it. So, all these people that keep getting GLP-1s have the side effects. Oh, you know what? We can make a personalized product for you which maybe has this ingredient or this serving which will be a lot better for you, and then they can still sell it through that way, and obviously the appetite control. So this is still going to be a major category for them, and if you look here, there's still so many TAMs for them to expand to. They're only just scratching the surface on the healthcare industry. Look at the recent financials of the recent quarter: 45% revenue, subscriber growth, 2.2 million customers. Their aim is to get to 10 million in the next 4 to 5 years, or 5 to 6 years. I think they'll be in the 4 to 5 years. Revenue growth of 69%. Look at the adjusted EBITDA margin, up from 6 to 12% as well. 90% recurring revenue, 75% gross margin profile, and 1 year payback period from the sales and marketing, which is great. Look at the targets that they've just put out. This was way ahead of what analysts were expecting. And the thing is, the stock went down off earnings after they did major upgrades on their guidance. If you look at the revenue guidance, for example, I think the analysts had it down at 51% revenue growth, and look at the guide they're giving here as well. Look at the EBITDA margin improvement as well, and this is going to be sandbagged. I think that realistically, this EBITDA margin is going to be more than likely around the 14 to 15% next year, which would be very good. And as we start to see with the company, they are scaling up massively on the revenue. The profitability is now starting to kick in because of the scales of efficiency, and as well as that, what we're going to see is that profit just go up and up and up. That's leading to an absolutely amazing balance sheet where there's no debt on there. There's a load of cash on there. They can do that in the share buybacks that they've been doing. They can go make those acquisitions that they've been doing, and that will help them scale up into those TAMs a little bit more as they make the acquisitions, which we're starting to see now. Fantastic company. In my opinion, the best growth stock on the market and the best valuation for a growth stock on the market right now. So I am a fan of Hims & Hers. Number 2, Google. So Google for me is a company that should be a top 3 largest position. I could argue the case that it should even be maybe even the largest position in my portfolio. It is one of the Mag 7s, but in my opinion, it's probably the Mag 7 with probably the best balance sheet, probably the best valuation, and has just as good growth as the other one. 2 trillion market cap, 22 times earnings for Google. When we look at the likes of Microsoft, which is like 35, I think it is. We look at Amazon, Apple. I think Apple's like, I'm just going to click on it here actually. Apple is currently 38 times earnings for Apple, and they're currently growing 3% a year, 7% on net income. When you look at Google on their last earnings was fantastic. you had revenue growth of 11% and you had net income of 28%. But yet this company is so much lower value than the rest of the Mag 7, and even right now is having a little bit of a pullback at the moment. Now, people forget, when you look at Google, what do you get? You get all these products. You're not just getting Google search. You're getting the likes of YouTube, for example. You're getting the likes of Google Maps. You're getting Chrome, Google search. You're basically getting a free bet on Waymo as well, which, if you believe in the autonomous driving, you're getting a free bet here. You don't have to bet on anything with the likes of Tesla, for example. You're getting it here. And the last earnings were fantastic, and yet the stock went down off earnings, and they continue to go down right now. But when you look at the earnings, if you actually look at the numbers, they were amazing. Like we talked about, absolutely amazing revenue growth. You look at the income, big explosion on the income. EPS went from $1.64 to $2.15. And all the platform was growing fantastic, but the big thing is Google Cloud. Google Cloud is growing at mega rates as well. And as we know from the likes of Amazon, this is an amazing profit driver for the business. And that's why we've seen operating income explode massively, because when you look at Google Cloud, it went from a profit of 864 million up to a 2 billion profit giant for them. And it's just absolutely insane amounts of growth what this is going to do. And like I said, you get all these other free bets of it, and you're getting this Mag 7 company where all of them are majorly overvalued, and you're picking Google up at 19 forward times earnings. And like I said, look at the company, look at the growth of the company and the growth drivers that they have. Look at the amount of profit that this company is throwing off. Look at the balance sheet of this company. You're getting one of the best, if not the best, balance sheets in the world right now, where the cash pile is at 95 billion. What they can throw into dividends that they now do and share buybacks that they now do. This is just, Google right now is majorly undervalued compared to the other Mag 7 players. The AI side of the business as well. I think Google is a fantastic business, and I don't understand anyone that doesn't have it in the portfolio, and especially right now. So yeah. Number 3, AMD, or as it's been known most recently, Advanced Money Destroyer. So the stock has had a bit of a tough time recently. Obviously, we've seen the surge in the AI. People got invested into this business because they thought, okay, this is going to do as well as like Nvidia. Unfortunately, the technology fell a little bit behind Nvidia, so they've been struggling to capture some of the AI hype at the moment, but the products have started coming back strong. We're starting to see the financials turn a little bit more in AMD right now, but yet the stock price isn't reflecting it, and it's been sending it down. So since the 8th of March, the stock is down 51%, and I think this has created a good opportunity to go buy AMD, because what we're seeing is a big growth in the likes of AI at the moment, and there's going to be a need to fill that. It can't just be the likes of Nvidia. There's going to be other players in this space, and AMD, I think, will eventually catch up to the likes of Nvidia. In fact, we've already seen it in the financials that they're catching up to the likes of Nvidia. And as we've seen before, Lisa Su, who's done fantastic since she's come in this business since 2014. The share price has still performed amazing since that time. She is going to get the business turned around, in my opinion. And right now we are starting to see that turnaround happening in the financials. The likes of the data center grew 69% year over year. The client revenue up 58% year over year. The gaming still has some sort of turnaround, but that doesn't matter, because the big thing is we're looking at is the data center. This is the biggest part of the business. This is going to be the big growth driver for them, and it's also the most profitable part of the business as well. So what we're starting to see now is that growing and growing the profitability massively. AMD are now starting to catch up with their products as well, as we've seen with some of the latest releases of their products, and as we see, the data center has been driving up that net income massively, operating income up 74%. And as we see, the likes of the MI350, which is released in 2025, should help them close that gap to Nvidia. And as we start looking at the 2026 launches, and we'll start seeing this MI400 also once again start closing the gap up next year. And now the company is starting to drive up that revenue growth, and also because of that, they're scaling up the profitability. The profitability is really going to come back fast in this business. It's also got a pretty healthy balance sheet, as we see here. Not much debt on there. Pretty decent cash balance as well. And right now we're picking it up at 21 forward times earnings. 21 forward times earnings for a company that is doing their financials that they're currently doing at the moment, where we're seeing the revenue keep scaling up as well, up 24%. I think in the next quarter we're expecting revenue growth of 28% in the next quarter. The profit starting to rise as well, all for 19 forward times earnings. I think this is pretty good value, even if you think it's a bit of a cynical stock and it goes in cycles. I think it's not too bad at all. Number 4, moving on to Evolution AB. I have continued to buy Evolution AB, being a bit of a tough time for it at the moment. Historically, being a very good performer in the stock market, peaked around 2021 as a lot of stocks did, and it's been bouncing around a lot since that time frame, but recently it's had a drop that's gone even lower, as you can see here. From where it was around about a year ago in March 2024, the stock has fallen around about 33%. Looks like it's starting to do a bit of a bowl here, as you can see. I will say, I don't know if that is true, but it does look it to me like the drop is starting to slow down and we are starting to see that U shape be created in the stock chart. Hey, it might be nothing, but I'm just pointing that out. 12 times earnings, which is historically a lot lower than this company has historically traded at. This is normally being a premium company at 25, 30 times earnings, so very much lower than what it would normally trade at, and a lot lower than what the market trades at as well. Even while you wait, you get to pick a nearly 4% dividend yield off Evolution AB as well. I buy this on the US stock exchange under the dual listing. So Evolution, what they do is they provide a lot of these live game shows, a lot of casino games, and they do them to the likes of FanDuel, Flutter, William Hill, because them guys are so busy focusing on the platform, the bets, that they can't actually make these like live casino games. So what Evolution do is they make the live casino games, they get the studios, and then they source them out to some of these suppliers like DraftKings and FanDuel, and then they just kind of take a cut. And what we're seeing at the moment is the iGaming growing massively, especially like in the likes of the US. The US is expected to become the world's largest iGaming market, and there's also other markets that have been growing rapidly. As we can see here, there's only currently 6 states that allow iGaming. Eventually, in my opinion, all of these states will allow iGaming, because what is happening is that all these states are making really good taxes off the iGaming, that all these states that are missing out will eventually go, you know what, we need to get our tax from this iGaming, and then eventually they'll allow it. DraftKings, FanDuel, they'll be allowed to operate in here, and then because Evolution do the games for them, then they'll be able to take the cut once the games are live in these states. So major growth drivers for the next 5, 10, 15 years for this business. Right now in the recent financials, Europe is still doing very well. Asia is a little bit weak. This is the bit of an issue at the moment with Evolution. So the profit and the revenue is getting affected a little bit because they are having a lot of cyber attacks in Asia, and we are seeing a bit of a slowing down in this category and a little bit of profit hit as they're having to deal with this situation. Cyber attacks in Asia and also the stealing of the games in Asia, and hopefully they say that they should have this under control by the end of 2025, and hopefully that comes back strong because that is a very big market for them. North America still growing at good rates and should grow at mega rates if more iGaming states come online. Obviously, we're seeing Latin America obviously exploding quite well as well at the moment, and still delivering good growth, as you can see here. The recent financials were still very good for a company growing at 12 times earnings, and even with the concerns around the Asian market at the moment, I think they'll resolve it, and then obviously you've got major growth drivers for them in the next few years as they continue to come back. Like I said, good valuation, 11 times forward earnings. Also consider the growth drivers they have going forward. Historically, great performance, great levels of profitability. That's why they can do these share buybacks they have at the moment going on. They're also doing the dividend, that 4% dividend yield, and a little bit of a flatter time period for them, but hopefully they bounce back once some of these shorter term issues are resolved for them. As you expect for a company with these levels of profitability, absolute cracking balance sheet here. And even though there's not been any insider buying going on, there has been a lot of insider buys 12 months ago. The CEO did buy during that time frame, which is obviously a positive sign. So yeah, I think that Evolution, it could be a bit more of a choppy time for them in the next 3 to 6 months, but long term I think the drivers for success are still very much here for them right now. Number 5 is a new stock into the portfolio, which is Enphase. So this is a relatively new position. I only started buying this one a couple of weeks ago right now. It has been absolutely smashed, as you can see here. The stock was a $319 stock. Since then, the stock has fallen 82% right now. And because it's fallen so much, I actually think that this is actually an opportunity to go buy. The financials are starting to turn around in the business, and I think that this will actually bounce back very well in the future. The reason why the stock fell massively is because during this time frame where the stock went ballistic, there was a lot of... So this company is a solar energy business, and solar energy went massive during this time frame. Low interest rates which obviously then we switched to high interest rates, and that's why the stock also started falling, and I think we might see a few cuts going forward. But lower interest rates meant that everybody could go. Solar panels not cheap to install, so a lot of people get it on interest, and being at home, people were sat looking for ideas, how to improve the house. They had low interest rates, a lot of them got the solar energy, so there's a lot of demand pulled forward. And then we've gone to the total opposite side, where we saw that the interest rates went up, so that's obviously slowed the sales down. But we kind of, all that demand that we had pulled forward has kind of now we've gone through that demand, and also that interest rate cuts should hopefully start speeding it up as well. What we were also seeing with Enphase during this time frame is that we had the Ukraine-Russia war situation, so energy prices went ballistic. That also caused a drag forward of demand as well. And there's also been a couple of other things, like the stock market going a little bit ballistic in valuations. We saw what was going on with the California situation at the moment. So it basically left Enphase with the worst comps that they could have, and a very negative cycle for solar energy. I think that negative cycle is about over now, and we'll start seeing that Enphase should start going back up in a better place now that we are at the bottom of the cycle. And I think we're now going into a bit more of a positive cycle. And as we know, when we look at someone like an Enphase, for example, solar growth is only going to continue to grow in the long term. There's definitely cycles where people are more keen to get it and not get it, and we've definitely gone through a cycle where people have not been keen to get it, but I think we're entering one of those new cycles where people will be starting to get solar energy now as the demand starts picking up. Now, these guys actually don't do solar panels. What they actually do is these microinverters. So what these do is they go underneath, like the sun panels. And historically, what a lot of these solar panels would have done is a lot of them use the string inverters. So basically, what would happen is this would get all the electricity from the solar panels and then send it into your house. The problem is that they were only able to get the power from the lowest performing solar panel. So if you had one solar panel that went down, or one solar panel that stopped working, there was dust on it, it was in the shade, even though all your other solar panels could be doing amazing in the sun, bringing a lot of energy, that one solar panel would affect your whole network. And basically, if one of them went down, your whole house went down. So what Enphase did is, from the traditional method, is they did these microinverters, and these microinverters would go onto each panel. And then if one panel went down, your whole house doesn't go down, because all these microinverters on the other panels would still be able to collect the power as well. And then what Enphase also did is then they started adding onto their platform, like batteries, for example, the gateway performance data, the cloud platform, so you can see what's kind of going on and manage it all through your mobile phone. EV chargers, so they started adding like EV chargers into the house as well, as obviously more people are getting EV cars at the moment. So they've also added in all these kind of other features as well during this time frame, and I think all these features will continue to do well as people get more of the Enphase products into the house. And then what they do is they manufacture it and they give it to the installer, and then they don't actually employ the installers install them for them, so they just kind of manage all these kind of materials. And because of that, it also means they have very high profit margins, and they're able to control their supply chain a lot more as well. And because of that, even though it's been a tough time for solar, where you've seen a lot of other solar companies struggle at the moment, Enphase has still been able to make good profitability. So when you actually look at the profit of the platform here, they've still been able to make okay profit margins. And this is in a major slowdown. So you imagine when the revenue and the demand cycles back up again, because the supply chain and supply line is just waiting there to be increased, they'll be able to make very good amounts of profit margin when they do see that kind of bounce back from the solar space anyway. And like I said, in the last earnings, I thought we started to see the bounce back in Enphase's demand. We saw the EPS do a very nice beat, revenue of 26% growth here. The guidance was also hiked at the moment. The market didn't seem to like these earnings as well. I don't know why it didn't seem to like the earnings. I don't know if it's because there was a big order that came through and they're saying, oh well, it was just one big order, but it's still an order. It's still sales at the end of the day as well. And you start looking at the company right now, it's down at 17 forward times earnings. This is a lot lower than what the company has historically ever been at, really. We're starting to see the demand back. If the demand starts coming back very easily, that starts flowing into the profit margin as well. They've got a decent-ish balance sheet, as you can see here. They sit on around about 1.6 billion market cap, cash pile as well. There's a bit of debt on there, but if they do get to the levels of profitability that they should do as they scale up, they should quite easily be able to pay that debt off if they want to, but it's not even a problem because the amount of cash that they currently have on the balance sheet as well. And when you look at the insider front as well, there's been a couple of insider buys, and the last insider buy was from the CEO, which I'm not even going to attempt to say his name, but he did buy on the 20th of November, and he also bought on the 14th of November as well, which is obviously a positive sign to see as well. And that leads me on to the last final stock today, which is New Holdings. The stock at the moment has had a tough time since earnings. You can see a major fall down. There was a lot of negativity in December time. The stock started bouncing out from that time frame, and then boom, it's fallen back down again recently. And I think it was off because of its latest earnings, which I just don't know why, because I actually thought they were actually really good. IPO'd in 2021 around about $11. Stock fell after its IPO, as a lot of stocks have done in the stock market. Has started to have a bit of a recovery out, but then we've seen the drop again, and the stock is still lower than where it IPO'd back in 2021, 4 years ago. But look, right now, 26 times earnings. They do operate in the Latin America fintech market, which is growing rapidly, as you can see here. Basically, there was a slower adoption to fintech in Latin America, and since COVID, there's been a big explosion as well. There's been a lot of e-commerce boom as well, so people, obviously, you can't spend cash, can you, on these e-commerce sites, so they need a fintech platform. As well as that, there's been a lack of banks that have been able to give decent products to their population as well. So you've got the likes of New Holdings that have come in and done that for them, and you can see here in Brazil, major number one player in Brazil. And also you can see another investment that I do have, which is Mercado Libre, but you can see the payment platform Mercado Pago down here in third place, and big growth drivers, enough for more than one player here. And we just said, you know, look at the PE at 25 times earnings. Because they're growing so much at the moment, the company is actually a 18 forward times earnings business. You look at the platform, major amounts of growth drivers for them. Customers are joining crazy. You can see the launch of Brazil, the launch of Mexico, the launch of Colombia. So there's even still other countries that could launch into, the likes of Argentina, for example. But customers do continue to join them, and financially as well, it's been a very good performer. You can see here that the profit has been doing very well for them. The revenue growth has been doing very well for them and should continue to grow at very good rates. All this for 18 times forward earnings. As well as that, pretty decent balance sheet, as you can see here. Nice little bit of cash balance going on. And like I said, the stock market has seemed to have thrown New Holdings under the bus since its earnings. Like I said, I thought they were very good. You know, you look at the net income, it went from 395 million up to 610 million. I don't know if the market is being stupid just because the revenue missed by 180 million on a 2.93 billion basically figure. I mean, what is that? 1%, is it? A 1% miss on the revenue guidance, even though they still grew at 24%. I don't think you should be getting a company growing at 24%, that net income's going up this rate, and you've got the major TAMs for them to continue growing, and you've not even expanded into the likes of Argentina yet. You shouldn't be getting a company that's doing these sort of numbers really at an 18 forward times earnings. So yeah, I'm a fan of that one. So I have been buying New Holdings on the dip at the moment. And that is all the stocks that I have bought and sold between the 1st of February to the 1st of March. Hope you enjoyed the video, guys. If you could hit the like button. And apart from that, have a good weekend. See you in a bit.